Good morning, ladies and gentlemen. Welcome to this special coverage on Business Today television for the Budget Day. I'm your host, Shail Bhatnagar. Finance Minister Nirmala Sitharaman will shortly be presenting her 7th budget for the Modi government and her first one after Mr. Narendra Modi was sworn in as Prime Minister for a record third term earlier this June. Let's look at the background of this national document, which will be unveiled over the next 2.5 hours. There are challenges, there are opportunities, there are pitfalls and red flags. For the moment, let's begin with what the challenges are. For the first time in 10 years, ladies and gentlemen, the ruling Bharatiya Janata Party finds itself at the helm of a political coalition and a reduced electoral mandate for Prime Minister Modi. Let's see what are the points that the entire nation would be looking for. As far as the challenges are concerned, the economic survey actually posted a muted expectation as far as GDP growth is concerned for the current financial year to March 2025. Expectations are of a 6.5 to 7% advancement in gross domestic product compared with the 8.2% growth in nominal GDP that you saw in the previous accounting year. So has actually GDP growth started to fade? Personal consumption growth is just 50% of GDP growth, and that's because of the kind of rural stress that you are seeing in villages, in Tier 2, Tier 3, Tier 4 towns, and of course in the urban landscape as well. Job creation needs to accelerate. This is something that the BJP has learnt from the kind of national mandate that it got this time, a reduced number of seats from 303 last time in 2019 to about 236 as of now. Is the peak GST growth behind us? We've seen monthly GST numbers somehow now stagnate around 1,20,000 crore mark. So is this something that the market is keenly looking at? How the government boosts its GDP and income levels, and of course our corporate taxes slowing. We've seen a very fine capital expenditure from the government over the last 3.5 years, but private capex from corporates for this point of time remains missing. Passenger vehicle sale, two-wheeler sales are not up to the mark, and they are pointing to this rural stress that is visible on monthly sales numbers for bikes, for scooters, for low-level and entry-level passenger cars. Fiscal consolidation plus real rates and global slowdown. If you put all this put together, are you seeing the world's fastest growing major economy looking at a local slowdown? So these are the points that Finance Minister Nirmala Sitharaman will be addressing while she presents her 7th annual budget in about 2.5 years from now. While these are challenges that she's grappling with, and as are large parts of corporate India, let's look at the report card that the BJP has put up as far as the past 7-8 years is concerned, and of course the immediate preceding 2-3 years. Well, ladies and gentlemen, this is the best macro ever. You have a current account deficit which is under control. You have a roaring stock market. You have, even though GST collections, income tax collections and corporate tax collections are showing signs of plateauing, yet these are at record levels. Core CPI inflation is at about 3%. This is something really good. And if you look at the performance of the Reserve Bank of India in controlling this inflation, it is the best amongst major economies. What is really interesting is that if you see the difference between projected inflation and actual inflation, this is the lowest in India if you look at the top 10 major economies. This is a very big plus and a pat on the back of the Reserve Bank of India governor. What else is good? The kind of revenues that the government is getting in terms of tax collections, in terms from this extra dividend that has come in from the Reserve Bank of India. These are phenomenal numbers and are helping the government balance its books in favor of growth. Now let's look at the markets, something that we do on a very regular basis. Well, ladies and gentlemen, this is a Goldilocks scenario. The best macro ever, being appreciated very well by stock markets. We'll show you a series of returns that the market has earned over the year-to-date time frame, and it's been a phenomenal rally of sorts. You've seen intense amount of wealth that has been created by stock markets, especially in PSU stocks, something which find favor both for investors as well for traders. Look at the Nifty, up about 11% over the past 6 months. When you compare it with the performance of the Dow Jones index in the US, it's up about 7.3%. And remember, 11% is something which is phenomenal over the last two and a half, over the last six and a half months. What is really interesting is that in the past 7 weeks, we've seen the Nifty appreciate 2,000 points. And that was because of the run of the budget. We've seen PSU stocks in the banking space, in the defense space, like Mazgaon, Garden Reach, Hindustan Aeronautics, so many other counters giving strong 3x, 4x kind of return over the last 18 months. We'll again dip into the market as far as prices are concerned, and then we'll look at a lot of other data that is coming in. But for the last 6 months, you've seen the PSU index rally 42%, the telecom index up 38%, the realty index 35% higher, and the power stocks adding about 35% over the last 6 months. We'll show you a lot of data, but let me first look at what is on offer as far as today's programming is concerned. Shortly, we'll be joined by Mr. Dharmesh Shah, Head of Derivatives and Quantitative Research at ICICI Securities. They are our research partner today. We'll have Mr. Chirag Shah, Vice President of Research at ICICIdirect.com, shortly joining us. And of course, a lot of other top market men and women will be with us throughout the day to not only understand the intricacies of budgets as far as the financial numbers are concerned, but to see how markets respond, what are the kind of sectors that they are looking at. Will housing outperform? Will infrastructure be at the top end of Ms. Sitharaman's speech? Will we have a lot of work to be done on FMCG? How will rural demand be boosted? What are the processes to set up new cold storages? Will the cost of doing farming decrease? Will you see higher subsidies for housing? Will you see higher subsidies for fertilizers, so on and so forth? Across the day, you will have people like Devin Choksi, Manish Dangi, he's the CEO and founder of Mosaic Asset Management, Manish Sonthalia from MK Stocks and Shares. All these people will be joining us fairly shortly. What we'll do, ladies and gentlemen, let's now dip into the day's proceedings and okay, what we'll do is dip into the day's proceedings and start our work with the ICICIsecurities.com. We have with us Mr. Dharmesh Shah, who's the Head of Derivatives and Quantitative Research at ICICI Securities, and Mr. Chirag Shah, Vice President of Research at ICICI Direct. This, ladies and gentlemen, is a very trusted brand which you can live the life and look at your aspirations and research back investments from ICICI Securities. Mr. Shah, Dharmesh, to you first. What are your expectations from the budget? What do you think will be the fiscal deficit number that you're looking at? And what are the 2 or 3 major announcements that you have in mind, which you would like to hear from the Finance Minister about 2 hours from now?
Yeah, hi, very good morning to you and all your viewers on Business Headlines TV. So today, yes, as we all expect the 7th budget coming in from the Modi government. So the key trigger for the market would be no tinkering with the short-term and the long-term capital gains tax. So no news on that front will be a very good news for the markets. Secondly, if you look at all the budgets, the previous 4 or 5 budgets of Modi government, the sheer focus has been on inching up the share of manufacturing GDP in the overall economy. And probably if you look at the capex trends that had panned out, 1.4, 1.5 was the capex intensity ratio if you look at the period from FY17 to FY20. And if I look at the numbers right now, the capex intensity is almost double to 3.2% in FY24 budget, and FY25 the same ratio has been pegged at 3.4%. So our clear expectation from the budget is that this number should not be tinkered with. Okay. Even if the number goes up, it's pretty fine. But the capex focus of the government and the manufacturing-led growth focus of the government should be there. You might see some other tinkerings that might happen on the fiscal deficit side, or the revenue assumptions of the government on the direct tax collection and indirect tax collection might be revised upwards given the kind of GST collections that we have seen, the kind of corporate and the individual tax collection we have seen, and the buoyancy in the economy that we are witnessing at this point in time. So I don't think so. The 5.1 number fiscal deficit, 5.1% fiscal deficit number will be a problem for the government to achieve, and probably will be on a decent fiscal consolidation path. Secondly, as I already mentioned, there might be some relief to the middle class taxpayers and the middle and the common man per se. So there might be some schemes that might see rural scheme or the social schemes that might see increased allocation. So if you look at the interim budget that happened in February, there was a higher allocation that happened to the housing scheme. There was a higher allocation that happened to the Manrega, where the allocation went up from 60 odd thousand to 84, 86 odd thousand crores. So probably those all schemes would be there, but I don't think so that will break the discipline of the government in terms of maintaining the fiscal consolidation. Because if you look
Right,
at
sir.
the RBI's dividend, it was pegged at 1 lakh odd crores, and the final outcome is almost double of that what they will be receiving from the RBI. So the government has a lot of cushion in maintaining fiscal consolidation, in pushing the capex growth, and also meeting the expectations of the common man. So I don't think so you can expect any much tinkering in the budget that might happen. And if that does not happen, market will take this very positively, and we might see some up move in the markets post the budget.
Right. Let's get Chirag Shah into the conversation. He is Vice President for Research at ICICI Direct. A very warm welcome to you, Chirag, on Markets Today. Let's look at the possibilities that sectors and stocks might enjoy today. What are the 2 or 3 top things on your radar when you're looking at Finance Minister Nirmala Sitharaman in her speech? Any 2 sectors that you have which she would address in terms of higher allocation, or any 2 sectors which you think might outperform in today's market, given the background that Dharmesh has provided us?
Actually, I was only answering the previous question. My apologies on the same. So I would continue on your answer, saying that the 2 sectors that we believe can do good is number 1, the banks, the banking sector per se, and the capital goods and the industrial sector. Because even from a macro perspective and a long-term perspective, we as a house are quite bullish on both of these sectors. Capital goods, if you see the capex intensity, as I already mentioned, the capex stands at 11.1 lakh crores from the government side, and the kind of ordering and tendering activity that is happening on the ground is quite among us. India had never seen a structural capex cycle barring the 2003 and 2008 era. And post that, we had a very fragmented kind of capital investment cycle coming into the country, and capital goods as a sector had suffered a lot over the last decade. Probably we believe that over the next 3-5 years, capital goods sector is one of the hottest sectors to watch out for. Though in the interim there might be some valuation weakness that might have happened, but again, any correction or any dip in the stocks would present a superb buying opportunity in all the stocks. Secondly, banking sector, mostly on the PSU side, we believe the kind of restructuring of balance sheets that have happened, the amount of capital that they have, the amount of cushion that they have on their balance sheet to grow in double digits over the next 3-4 years with lower NPAs, most of the provisioning behind us, and valuations still in a very comfortable range relative to markets and other sectors. So PSU banks again will be in the focus. Again, if you look at
this budget would
and if you look at the fiscal roadmap, if the market borrowing program of the government is not lopsided or one-sided, then probably we might see yields also cooling down, which will aid the valuations of PSU banks and the banks per se.
But to me,
So I believe these 2 sectors are to be watched out after today's budget.
Fine. And what we'll do, Chirag, is that while both you and I discuss respective sectors, we'll play out the kind of year-to-date returns that investors have made in sectors such as PSUs, sectors such as realty. We have all that data in front of you. In fact, if you look at it from this point of view, the worst performing index over the last 6 months is the FMCG index, now at a record high and up 7%. So you can well imagine, if the worst performing index is up 7%, what are the top performing ones doing? PSUs, for instance, on an index level are up 42% over the last 6 odd months. We'll keep on showing you that data. Chirag, let's take this discussion forward. Defense, it's out of stratosphere. Look at the kind of returns that people have enjoyed on Mazgaon Docks, Hindustan Aeronautics. Look at how Garden Reach has outperformed. All of them more than doubling over the last 2 months or so. When you look at this kind of euphoric markets, what do you advise your investors? Do you see defense continuing the kind of rally that it has seen over the last 3 months in the next 6 to 9 months?
Okay, so as you mentioned, there is a catastrophic move or a euphoric move in the defense stocks. I completely agree with it at this point in time, because valuations are on a very expensive side at this point in time. But if you look at the tailwinds that the sector has, it's quite enormous.
Yes.
Right. So that's what I was earlier mentioning, that yes, in the short run, or the industrial sector or the capital goods sector, which includes defense as well, might be on the richer side for to some extent, and therefore I would advise any dips should be used to accumulate rather than buying them on highs. So probably you have to also bifurcate within the defense space. You have to bifurcate where the stories will be structural and where the stories will be lumpy, and the earnings are difficult to project. So let's take a classic example of a Hindustan Aeronautics.
Yes.
If you look at the kind of margins or the kind of opportunity tailwind these guys have, probably they have a story of next 5 to 10 years. Yes, valuations have run up, but the kind of technology that they have, the progress that the indigenization that they have done in terms of manufacturing of fighter aircraft, it's quite commendable. And if you go back 4 5 years back, this company was into deep trouble, had working capital issues, had to borrow loans to repay its salaries. So one can understand how the way the opportunity has worked out for this particular company, and the way they have overcome these challenges and reported this robust performance that they have done over the last few years. So I believe Hindustan Aeronautics is a classic structural play. But yes, every bull market, there are steep corrections and they will come. And when this kind of corrections come, then there are opportunities to buy over the next 3 5 years kind of a time frame.
Okay.
So you have to be very selective in the defense space. Not all are blanket buys. So you have to be very selective in terms of buying what you are doing.
Okay, this is the chart of Hindustan Aeronautics in front of you. While 5,000 is where it closed at in yesterday's markets, remember the all-time high is somewhere in the vicinity of 5,400, 5,500, and this is after a 1:1 bonus. So the stock has actually gone up by about 4.5x over the last 2.5 years, and at this point of time, the 6 defense companies that we have from the government, which is Hindustan Aeronautics, Garden Reach, Mazgaon Docks, Cochin Shipbuilders, BDL and BAML, are quoting at a PE of between 45 to 70, compared when the Nifty PE of about 23. So that is the kind of enthusiasm, that is the kind of returns that these stocks have shown. And now you have sector specific funds being launched, some of them doing pretty well over the last 1 year or so. Let's shift our focus, Chirag, on how markets are likely to see the cornerstone of Mr. Modi's success story, which is housing. Lot of expectations, and in fact the first comment that Mr. Modi made was that he was keen on constructing 3 crore more houses in the rural and the urban landscape in his 3rd tenure. How do you see the housing sector? Any favorites there? We've seen a fantastic rally in finance companies such as HUDCO, LIC Housing Finance, PNB Housing Finance. What are your thoughts from this space?
See, housing again is a nice way to play the government reforms, or the way to elevate people out of poverty. So that's a very nice theme, and probably you can either play it via the NBFC route, which finances the creation of the housing stock. And secondly, you can also play via the companies who directly benefit from this particular schemes, as you mentioned, guys like HUDCO and etc. So our preference would be to play themes like NBFCs, because we still believe the valuations are quite attractive out there, because a lot of NBFCs had problems over the last 3 4 years in terms of their balance sheet sizing, the kind of risk that they had taken. Probably they have restructured themselves over the last 3 4 years, and valuations and growth prospects are quite appealing at this point in time. So we believe that NBFC would be a great space to play this housing thing in India.
Okay, and let me just give you some interesting data on Pradhan Mantri Awas Yojana, which was launched in 2015. So far, about 2.95 crore homes have been made in the rural landscape. 2.95 was sanctioned, 2.61 crore have already been made. If you look at the urban landscape, about 1.18 crore homes were sanctioned, out of which 84 lakhs have been built. And on top of this remainder, you have a fresh order of 3 crore homes to be built in the next 5 years starting June 2024. So this is a huge success story that Mr. Modi has enjoyed across the India. It has given him votes. It has brought cyclical periodicity as far as markets are concerned, and we've seen stocks such as NBCC, stocks such as Hutco give 2x, 3x return over the last 18 months or so. Let's look at the other segment, Chirag, which is the services space. A lot of high value jobs seem to be created by three segments from overseas, which is the global centers for services, the global centers for technology, and the global centers for sourcing Indian products overseas. The GCCs, the GTCs, as also the kind of segment that we've seen on supply chain. How do you see services planning out? This is a success story that India has enjoyed over the last 3 decades. What do you think Ms. Sitharaman will do in her document to boost this global space?
See, basically, I don't think so. There will be anything separate that will be carved out for this space in totality, because you see the PLI scheme is already there, and the concept of or the notion of China plus one has to gather momentum to get factories out here, to get the global services centers out here, and the kind of is probably one area where the government can do something is on the semiconductor side, because that is the area where India is lacking. And if one needs to be a superpower going ahead, or a top 5 or top 3 economy going ahead, you need to have a semiconductor ecosystem in the country, which is currently lacking big time. So probably, and we have seen a lot of announcements by the government, by corporates who wants to invest heavily, both Indian and global. So probably that is one space I think can create a whole lot of a very big ecosystem in India, which can in turn drive employment, drive manufacturing growth, drive services growth, etc. So probably that is one area one should look out for in this budget.
Fair point. Shortly, we'll be joined by both our reporters who are tracking Nirmala Sitharaman. Remember, this is a huge process. She leaves from a residence in central Delhi towards the finance ministry. From the finance ministry, she picks up the budget document, offers that budget document to her cabinet colleagues, and from there on, she goes to the parliament to begin her speech. It's a very nice visual number. You see at the moment she's being photographed with her team within the finance ministry. All the secretaries are there. She herself is there, the Minister for State for Finance, sitting on her left side, and the entire financial team that's made the document being photographed for that point. I think Mr. Dharmesh Shah, Head for Derivatives and Quantitative Research at ICICI Securities, is with us. A very good morning to you, Dharmesh. A very warm welcome on Market Today. It's a day when the report card of the government for the next year and its expectations on taxes, its expectations on GDP growth, its work in progress for many sectors will be unveiled. You look at derivatives and quant research, and it's been a wonderful 18 months for the last stock markets. What do you think the budget document will unveil for markets?
Yeah, good morning and thank you for inviting me on your show. Yes, definitely I think so. Market has been some bit of a volatile ahead of the budget, and we have already seen some bit of a profit booking on the Friday trading session. But I believe I think so as we are moving into budget, I think so the positions are seems to be lighter because there have been some bit of a panic in mid caps where we have already seen a 4% cut from the high. So we believe yes, things looks to be volatile, but more likely I think so budget post budget we believe I think so market should be more of a range bound consolidation in this range of 24,200 on the downside. On the higher side, again, we believe 24,700 will act as a stiff resistance in the near term. Closing above 24,700 will further fuel the rally towards 25,000. Else, consolidation in this range of 24,200 to 24,700. So more likely, I think so. I believe market is likely to consolidate in this range for some more time before the next leg of upside.
Okay, Dharmesh, let's take it sector by sector. The last 24 months have been fantastic for PSU stocks. It started with the rally in the banking sector. PNB, Bank of Baroda, Canara Bank took up the charge, and then defense stocks such as HAL, Mazgaon, Cochin, Garden Reach joined the party. And now you have PSUs of all hues and colors having a wonderful time on Dalal Street. Do you think this rally is overstretched? The PSU index in itself over the last 6 months has appreciated 42%.
Yes, I believe I think so the sector has been the clearly outperformer for the last 6 months. But let us understand, go back to the history. I think so. Every bull market has their own leaders. If you go back to 1990, 1991, I think so, world economy were the leaders. 1999 was the leaders of bull market were IT. 2003 to 2008 it was more for real estate infra. And then coming back to 2021, 22, this bull market. Clearly, PSUs are the leaders and they will continue to be leaders going forward also. So we believe, I think so, yes, we remain to be constructive, positive for PSUs. Yes, there will be the times of corrections which is required because you cannot have a V-shaped recovery all the time. You should be having a bit of a zigzag movement. And that is what is happening in the PSUs. So I believe structurally PSUs are positive. They remain to be positive. One should definitely look these dips to be buying opportunity, like sectors like defense, railways, or something like oil and gas. And so these are the sectors one should definitely look also. So we remain to be positive for PSUs from the long-term perspective. Yes, the short term, the sector has been overbought. What we are seeing is nothing but a more of a profit booking at the current.
Okay. Dharmesh and Chirag, I'll request you to hold your horses. We'll shift focus from the markets and come back to North Block. Chetan Bhutani joins us from North Block in Central Delhi. He's the associate editor at BTTV. Good morning to you, Chetan. I'm sure it's extremely humid on North Block, but today is an exciting day. Tell us what you're looking at. Has Finance Minister Nirmala Sitharaman reached her office in North Block?
Well, good morning, Shell. Well, of course, it's very humid out in Delhi. Chances for rain, but of course, we're all only waiting for Nirmala Sitharaman's the much-awaited budget speech. Well, yes, absolutely. Action is top-notch at North Block. Minister Nirmala Sitharaman is yet to reach the Finance Ministry. The MOS Finance has, of course, reached the ministry. Well, talking about the various sectors that the budget could focus on, Shell, is the fact that two main sectors that the government will continue its focus on. The first is, of course, the road sector. The second is the railway sector. Both of them actually combine and have combine 47% of the market capital, capex. Also, secondly, Shell, what the government will be doing is allocating about 10% further to ensure that Highways Ministry gets about 3 lakh crore rupees worth of investments and 3 lakh crore of allocation as well. Secondly, what the government would do is, of course, railways, again 3 lakh crore allocation would be done, shipbuilding would be promoted, and other sectors like defense, Make in India for defense sector would further be promoted, and 10% allocation would be done, Shell.
Okay. And Chetan, as you describe various allocations that will be happening 2.5 hours from now, Finance Minister Nirmala Sitharaman has left her residence in Central Delhi. There was a convoy of white cars that you just saw, and is now headed your way, Chetan. I'm sure over the next 2 or 3 minutes you'll see a convoy of white cars halting in front of Finance Ministry. Chetan, a couple of more questions from your side. Can you please help our viewers understand the kind of allocations that the railways has seen, the housing sector has seen, and more importantly, the infrastructural build that has happened over the last 3.5 years? Do you see those numbers going up in the document over the next 2.5 hours?
Well, absolutely, Shail. If we could talk about the railways got 2.78 lakh crore rupees in the interim budget 2024, and in the July upcoming budget, we expect a double-digit hike for the railway sector, because remember, the government has to build new tracks. They have to develop the new infrastructure, make it more safer, develop more stations, and of course, remember 673 crores individuals traveled by train in the last year. So, a huge amount of work that has to be done on the infrastructure side of ticketing. Of course, IRCTC is something that has been working on that front as well. So in the coming 2 to 3 years, of course, the government will be keen to enhance its focus in the housing sector as well. The government also mentioned about housing for all and the PM Awas Yojana. The housing allocation for that particular scheme will also be hiked, what my sources are telling. So let's wait and watch what the big budget speech has to say about all these two sectors.
Okay, and Finance Minister Nirmala Sitharaman will be shortly reaching the Finance Ministry. I'm sure Chetan will be on top of it. Let's get back to Chirag before we let him go. Chirag, my final question to you, and a very quick one. Two stocks which, according to your research, should be watched in today's market play ahead of the budget.
See, since the starting of this interview, I have been harping on one theme, that the government should not tinker the capex momentum that it has set over the last 5 years. And my bet is that if you are playing the capex cycle, and capex cycle is the way to go to India to make the third largest economy, probably L&T is the most preferred bet in that particular environment, because the kind of diversity, the kind of execution capability, the management bandwidth, and the kind of balance sheet these guys have, probably L&T is the best capex play in India. So that is number one bet for me. Secondly, on the PSU banks side, which we are already positive, probably SBI looks quite undervalued to us and underrated to us, because we believe, apart from the banking operation, which is top notch in the PSU space, probably they do have a lot of subsidiaries which offer a lot of value. Let's, for example, say SBI Mutual Fund or SBI Insurance, General Insurance, etc. So probably, and the kind of valuation that these are trading at compared to mid caps or the relative pairs in the sectors, it's quite abysmal. So I believe there's a lot of room of earnings catch up and a lot of room of re-rating to happen in both these stocks. So in the large cap space, this would be my two top bets.
Okay, ladies and gentlemen, India's largest constructor, which is Larsen & Toubro, a part of the 10 index heavyweights that we track, is what finds preference from Chirag. And of course, India's largest public sector bank, in fact, India's largest bank, State Bank of India, is something that finds fancy with Chirag. Thank you so much, Chirag. We've had a very interesting discussion, and we'll take it further. Also who've joined us are Avani Bhatt, Senior Vice President for Equity Derivatives Research at JM Financial, and you also see Vaishali Parekh, VP at Technical Research for Prabhudas Leeladhar. We'll also be shortly joined by Karishma Asudani. She's the reporter who's been tracking the finance ministry for a very, very long time, over the last 15 years. We'll wait for Karishma to be patched and let's hear her side of what the budget is likely to do. But before that, what we'll do is have a word with Vaishali. Good morning, Vaishali, and a very warm welcome on Market Today. Two picks that Chirag from ICICI Securities is looking at for today's action is L&T and of course State Bank of India. You've tracked both of them. I'll request the PCR to fire a long-term chart of Larsen & Toubro, and you'll see the kind of money that investors have made in L&T over the last 6 months or so. Vaishali, good morning. Your view on L&T first.
Very good morning, all of you. So yes, Larsen & Toubro, everyone is tracking, and it is one of the stocks which normally people are having in their portfolio. But technically, I would say it's just hovering around at these levels. We need a clarity. It needs to go above 3,700 levels. And from there on, I think it brings in further strength for targets of 4,000. So yes, this is the stock on the radar for everyone. But I would also say that yesterday what we saw was that there was a fresh round of buying coming again in defense stocks. So yes, one can also bring BEL, Bharat Forge. These are the stocks which also look pretty good at these levels. Of course, HAL is not much to talk about, but yeah, these are the stocks also that one can look into.
Okay, Vaishali, what we'll do is we'll get Karishma into the conversation. She is tracking Finance Minister Nirmala Sitharaman, and as you can see, the wonderful sandstone buildings behind her, that's the North Block. Good morning, Karishma. A very warm welcome to you. What are your thoughts on the forthcoming document, which will be with us in 120 minutes? What are the few numbers that you're looking at, and what do you think will the FM do?
Shell, I think I'm going to start off by saying that she has arrived in North Block. She has just entered the Ministry of Finance, where she's going to meet her A team of budget with all the finance ministry secretaries, the CEA, MOS Finance, and then she's going to set off on her journey to present this seventh consecutive budget. Now, what's expected on cards is the much obvious that government is going to show continuity in its reforms and policy. It is going to be about fiscal consolidation, about getting their numbers right in FY24. They've in fact surpassed expectations. Their growth, GDP growth levels have been at 8.2% for FY25. They're expecting about close to between 6.5 to 7%. Mind you, that's a very conservative target that they have taken, because looks likely that with an 8.2% example, they will definitely do well and maybe beyond 7%, which even the IMF and RBI have been saying. Now, coming to budget today, big on agenda is capex number 11.11 lakh crore that she put as a FY25 target, but there could be some increased allocation on that by about say 5 to 10%, more allocations towards the agri sector, some uptick to be seen in Mandrega sector. On the manufacturing side, they're going to have some kind of announcements to try and boost the consumption level, but more and more, the most important for a common man, that is the salary tax individual, is some tweaking to the new regime under the tax bracket could be expected. Okay,
Karishma, hold your horses there, and I wish I were next to you. There are about 20 budgets that I have covered outside the finance ministry, and it was wonderful. Of course, it's very, very humid now, but remember, the actual budget used to be presented somewhere in February and March, and it's the loveliest part of Delhi that you are standing in.
In that case, Shell, is there a significance of the color of the sari, because it's white today? What does the market have to talk about?
The market, Karishma, is on steroids. And it's the markets where expectations are the highest. Like I said, I wish I were next to you, but maybe in the next budget I'll again become a reporter, and then we'll do it jointly. But for the moment, ladies and gentlemen, we'll head back to the studio. All the best to you, Karishma, and I'm sure you'll do a phenomenal job, and the numbers that you've mentioned, we'll keep an eye out on them. Ladies and gentlemen, let's welcome Vineet Bojlinkar into the conversation. We are already talking to Vaishali and of course Avani Bhatt. Vaishali, you were talking about Hindustan Aeronautics, L&T, and so many other counters which might shine in today's trade. Let's get Avni's view in. She's the Senior Vice President for Equities Derivative Research at JM Financial. A couple of stocks, Avni, that you're looking at, and then we'll go to Vineet.
Yeah, good morning, Shail. Good morning, all the panelists and all the viewers as well. So it's a big day today, and my view is that there's a lot of rally that has already happened in mid-cap and small-cap stocks, and I think one should now focus on the large-cap space, the stocks that have not really moved, and I would not go with the very popular budget theme stocks, because they've already run up quite a bit, and it's time to focus on quality stocks that can rally from here on, irrespective of what the budget announcements are. So my first pick would be HDFC Bank.
Okay.
It's given a very good breakout. After the last results, the stock corrected quite a bit, and it's come near the weekly support levels. And from there on, it has again picked up a good momentum. A lot of buying interest is seen by the FIIs as well. So it's better to be in the large cap space, and
Absolutely.
from here on I expect Bank Nifty to do well, and if at all Nifty also has to move towards 25,000, it won't be without the contribution of Bank Nifty. And if Bank Nifty has to move, the elephant of Bank Nifty has to move, and that is HDFC Bank. So my view is positive on HDFC Bank. I am targeting somewhere around 1740 to 1800 levels, and I would keep a stop loss of 1565 on the stock.
Right. It's very eloquently put as far as India's heaviest weighted counter on both the Nifty and Bank Nifty is concerned. HDFC Bank, ladies and gentlemen, on a 1 year basis is down 2.3%. And remember, despite this weakness, both the Nifty and the Bank Nifty are at record highs. In fact, in this very small minority of stocks in the Nifty which are in negative territory over the last 365 days, HDFC Bank is down 2.3%. That's Avni's pick. But let's get our good friend Vineet Bojlinkar into the conversation. The ladies are looking at the technical and derivatives part of the business, and Vineet will offer his views on the fundamental side. Good morning, Vineet. A very early day for you. Any two stocks that catch your fancy which you think might be benefited from the budget speech shortly?
I think one of the significant beneficiaries of the budget is going to be ONGC. I expect a very strong, some kind of policy measures coming in to expedite, energy promotion. That is one. And another stock which I think could be a very big beneficiary is going to be from the manufacturing side. Because if you read the economic survey very clearly, what they've stated is that the gross capital formation has been very strong, but it is more towards the industrial buildings and not towards the manufacturing and IP content. So, I expect that part to do very well. And out here, I think some of the companies like BHEL, BEL and L&T are well positioned from the large cap to benefit from this.
Okay. ONGC right there in front of you, ladies and gentlemen, India's most profitable company on the PSU side. It's appreciated 88% over the last 1 year. Needless to say, this is a record high. And in July, this has been the best performing Nifty stock as far as prices are concerned. Right there in front of you is the other stocks, BHEL and of course BEL. Vineet, if you look at the four stocks that you've suggested, three of them are from the PSU pack, ONGC, BHEL and BEL. Is this a deliberate thought process on your part to look only at the PSU side, or are they presenting the best opportunity in terms of valuations even now? ONGC may be at a record high, but still a single digit PE.
So, that's what the valuation and the capital asset formation which is there, a lot of value needs to get realized from ONGC. And if you look at BHEL and BEL, they are on a whirlwind asset creation formation measures. So BHEL has got huge orders for its, power division. Other divisions are also doing well, defense, railways, engineering. And BEL similarly for those aspects. So I think that these three companies offer veritable opportunities and should be looked at very closely going ahead.
BHEL is up 2x, 210%, ladies and gentlemen, over the last 365 days. Let's get Vaishali into the conversation. Vaishali, to you, BHEL, the price at the moment is 304. What are the medium-term charts telling you? What are the price targets that you see, say, over the next 6 months or so? And Avni, then I'll come to you for BEL. But Vaishali, to you first. BHEL.
Yes. BHEL, we are seeing the long-term trend is very much intact. It has come to a level where it's at a crucial support. So it's a make or break level. We have to respect the 290 levels as a strong support. And having said that, if we close above 320, we are ready for further targets of 350. But if 290 levels are broken, we may see some profit booking. So that's how one would look at this stock.
Okay. Unlikely in this kind of a market, Vaishali, where liquidity is so high that we'll see BHEL breaking 290, but then markets are markets, they surprise us on both sides. BEL, ladies and gentlemen, Bharat Electronics Limited, the flagship of India's defense sector, is up 147% over the last 1 year at 312. This is actually a 1:1 bonus price. after which you see the stock again consolidating near record highs. Avni, what are the charts of BEL telling you for the medium term?
Has given a breakout in November last year after a very long period of consolidation, and I think this rally is here to stay. The uptrend is intact. Some bit of price retracements are seen on the stock after touching new highs, but those are regular corrections and they are pretty healthy for the stock. So on the upside, we can target somewhere around 360 to 370 levels on the stock. So stay put in this particular stock.
Okay, BEL, I'm requesting the PCR to fire a 3 to 4 year kind of a chart. Remember, the earlier rally in defense actually started from this counter, and it's only after BEL gave a 1:1 kind of a bonus you saw a dramatic appreciation in the likes of Mazgaon, in the likes of Cochin, Garden Reach and HAL in particular. Vineet, coming back to you, any expectations that you have from the finance minister on the India-Middle East corridor? You've highlighted 7 stocks which are a part of this long-term project that India has with the Middle East and of course Europe as well. What are your hopes from that one?
So I believe that shipping could be given some kind of incentive, to promote shipping in India, because, after our tilt towards Russia on a geopolitical side, there is the fear that, what if we are sanctioned? And then, ships are not necessarily Indian. They're mostly, Greek in nature, and insurances also don't are being sanctioned. So it's better to have our own security in terms of oil supplies, because Arctic is going to be a very important segment from where we get our oil in the future. So I believe that there could be something along the lines to attract shipping investments. Already, we have shipping companies registered in the IFC are around 11. So, if that tells you a trend of what is happening, then I expect something could come to shipping in this budget.
Okay, fair point. Let's head back to the ladies. Both Avni and Vaishali are great stock pickers. Coming to you, Avni, first. You've mentioned India's largest private sector bank, HDFC, as one of your picks. How about mid caps and small caps? On the index alone, the Nifty mid cap index is up 27% in the last 6 months. Any mid caps that catch your attention?
So again, from the banking sector only, I would go with IDBI Bank. IDBI Bank also has consolidated, has been consolidating for a pretty long time between the range of 81 to 91. Good volumes have picked up, results have been good. So I think this stock is ready for a breakout about 93, and it should be heading anywhere close to around 107 to 108 in a very short time. So IDBI would be my mid cap pick from the banking sector.
Okay. IDBI is something which the government has just recently announced. It has received a report on its planned divestment stake. We'll keep an eye out on this one, and this is something that I am also looking forward to in the budget speech, if there is any forward movement by the finance ministry on the proposed divestment of IDBI Bank. Vaishali, small cap index up 24% since December 31st. Any small caps that catch your fancy on the long side?
No, not really. I'm not tracking anyone currently.
Okay, not a problem. You've mentioned large caps such as HAL, Mazgaon in your earlier conversations, and of course L&T. Anything in the mid caps and large caps that catches your attention?
So I said Bharat Forge looks very nice. Yesterday we saw, again, there was good strength seen in this stock. So I think this stock is ready for our upward move going towards 1750 to 1800 levels. This is one stock to our liking. And in the mid cap, I mean, of course, the housing NBCC looks very promising once again. So yesterday we have recommended to our clients also. The long-term trend is pretty much intact. Yesterday there was a surge in volume as well. So I think this stock can go towards 200 and higher.
Bharat Forge right there in front of you, and a beautiful quarterly chart, 35% up as far as India's largest forging company is concerned. It's also a defense play, and a 91% return over the last 1 year. That's Bharat Forge for you. NBCC, again, one of those wonderful companies from the PSU basket that have done phenomenally well. Needless to say, the price that you see is consolidating near record highs, but again, 3-month picture of 39%. Vineet, to you, anything in the housing space, the solar rooftop space, or the green energy space where the FM can pay her attention and it catches your fancy as well?
Yeah, so if you want to do some fiscal profligacy, I think attaching it to some tangible asset makes a lot of sense. And while you're giving free electricity and other SOPs already announced in the previous interim budget, I think there will be more continuation of the same. And so I think uh, you know Tata Power looks very good related to that.
So Tata Power is a stock that catches Vineet's fancy. Vishali, this is right up your space. Tata Power, you and I have discussed from 250 rupee levels. What are the medium-term charts of Tata Power telling you?
That yes, if market were to witness some whipsaws, I think 420 for now is a very good support. But otherwise, I think 390, 400, we are very much close to the crucial support level. I would say keep accumulating because the long-term projections, what we see is 500 plus.
Okay, Tata Power, ladies and gentlemen, 424 to you. Before you let you go, Vineet, because you researched the markets so deeply. Okay, I think Vineet's left. I wanted to ask one very basic question to him. What if the budget is populist? What do you think the markets will react to? Vaishali, we'll stick to the derivatives part of the business. And within the F&O space, let's look at the top underperformers. These are stocks which haven't run up pretty sharply as far as the 1-year performance is concerned. And let's look at some names over the last 3 months that have been disappointing. On top of them is Bajaj Finance. It's actually down 5.6%, and you see the stock doing practically nothing over the last 1 year or so. 68.92. What are the charts of Bajaj Finance telling you? I believe this counter is still below 200-day DMA.
That is true. All the indicators are also showing a lot of weakness, but 6800 is the final support level. If we see a bounce coming in, this bounce can go towards 7100 to 7200 to start with. Above that, we can expect this to go towards 7500. So I think this can be looked into because we are very close to the stop loss. So once we see, worth taking a chance, 6800 as the stop loss.
Vaishali, I often think about this, that we've been so enamored with high double-digit gains, 40, 45, 50% appreciation, that all of us are chasing momentum and just not looking at great corporate balance sheets. It will be hard to find a balance sheet with the strength that Bajaj Finance has. Nevertheless, this is the one that's languishing. We have Vineet who's back with us. Vineet, one simple question. If the budget is overtly populist and there are a fair chance that it might happen given the reduced political mandate that the BJP has, what do you think will be the market's reaction?
Let me give you a slightly longish answer. There are 3 parts that I'll be watching very keenly in the budget. Whether we continue on the fiscal glide policy while doing, doling out freebies. And third thing is, how the inflation plays out because of this. So these are 3 things which are going to be very, very important to watch. If you see the budgets of 2000 to 2004, they maintained fiscal the glide path. So a non-BJP, that was also a kind of an NDA government, and there was importance given to fiscal glide path. So I expect the government to maintain fiscal discipline. they've got a lot of doles from good dividends from banks as well as RBI. So there is sufficient room for navigating with a slightly more populist tilt. But as I said earlier, there would be a conscious effort to link the uh, fiscal doles given out with some kind of a tangible asset like skill development, or with renewable power, solar power, rooftop solar, those kind of things relating to education. So I believe that these will be indirectly contributing to the economic growth, not giving away free power or anything which damages the economy, but more along the lines of which are semi progressive.
Okay. Before the pre-open rates start, Vineet, I just want to understand what is your biggest fear. We've seen this fantastic rally on the last 6 months. Even on 4th of June, the Nifty was at 21,200 and now we are at 24,500. A stupendous rally that we've seen over the last maybe 35 trading sessions. What is your biggest fear?
My biggest fear is that the government does not do enough on the populist side while still maintaining fiscal discipline. They have to do it because they have to stay in power. Okay, the economic performance of non-BJP parties in the recent past has been devastating to the economy as well as to the market. So if we want to have a BJP government in place with the present incumbent, you would need to do populism along with maintaining the fiscal climate.
So it's basically a fine balancing act that you expect from the finance minister from 11 a.m. onwards, not only to balance populism but also to keep fiscal prudence in shape.
And one more important thing is that even if they give some sops to the middle class in terms of income tax, it should be sufficient to for the middle class to feel that they have benefited, and not merely enticing the middle class to accept the new regime of taxation away from the old.
Right. And that, ladies and gentlemen, is the conundrum that the finance minister faces, to keep everyone happy, to balance her numbers, and at the same time provide an impetus to the markets, which are already at sky high levels, and of course to keep everyone happy, to keep home fires burning, to keep costs under check, and to keep inflation under check. All that will be there in front of you from 11 a.m. onwards, but for now it's time for pre-open rates to be in front of us. It's a 35-point downtick on the Nifty, nothing to be worried about. The markets will remain flat till about 11 a.m. before they start hearing what the numbers are likely to do. Okay, let's focus on HDFC Bank, because Avni's top pick is also the heaviest weighted counter on the Nifty and the Bank Nifty. It's opening 42 rupees lower at 1600. This will improve for the better. What's doing well? It's TCS, 2% higher, 43.73. Let's look at Infosys, another index heavyweight, 9 rupees higher, 0.5% uptick, 18.17. And what about the big boy Reliance? Reliance for the moment is right there in front of you, 3012, 11.6 rupees higher. A very quick look at what's happening in the NSE 500 space, and then we'll head back to our guests. It's a really important day for markets today. Coforge came out with its earnings today. Initial reactions are negative. The counter is down 10% at 54.68, but this will improve for the better. Federal Bank takes it away, 5% higher, record high, 204. You have a green tick on Suzlon, 5% higher, 57.83. NMDC, Canfin Homes, Wipro, Natco Pharma, all up between 3.5%, 5%. We'll wait for pre-open to settle. It's a more important day for guests, and I believe Mr. Manish Dangi, CEO and founder for Mosaic Asset Management, is with us. A very good morning to you, Manish. And I went through that lovely 6-paging document that you sent us in terms of your thoughts and expectations from the budget. Let's start right at the top. your expectations on the fiscal deficit number. Do you think the government has enough fiscal space to be both populist as well as prudent?
Hi, good morning. So, yeah, there is a bounty of about 0.5% of GDP, which is pretty significant. In numbers, it runs into 1.5 lakh crore. And that could be deployed in doing everything that you need. 1.5 lakh crore, though for a very large economy, is not that big, but still can do magic. So it can be populist, and it can certainly consolidate a little more than what was told to us in Feb budget. So both are possible.
Okay, so you are referring to the extra dividend that the Reserve Bank of India has given to the central government, plus buoyant GST, buoyant income tax numbers, as well as on the corporate tax part. What, according to you, are 2 or 3 pain points that the finance minister has on our radar, and she'd like to address them in the forthcoming budget?
I think, the biggest pain from a budgeting exercise is that Indian nominal GDP growth has actually slowed. Considerably. Now, see, for instance, understand that, let's say, even after GFC, which is 2008 crisis, India had a major fiscal response, but the public debt to GDP did not rise because the nominal GDP was in teens then, because inflation itself was in teens, actually. And therefore, what happened, of course, is that even after a very high fiscal deficit for a couple of years, we had high inflation, high nominal GDP, and therefore debt to GDP came down. Now in India, after the COVID, our response wasn't as big, and but it was in the form that inflation stayed relatively depressed. Therefore, GDP's rise in nominal terms was not as substantial.
Okay.
And debt to GDP actually has stayed high. So it was 72% before COVID, and now it's 82% and stagnated there. So I think from a major macroeconomic challenge, low nominal GDP growth and high public debt to GDP is the reason why, finance minister will not have a wiggle room at any point in time, let's say if there were to be another crisis, So that sort of would, if I were her, I would always be worried that, do I have space to actually re-stimulate it just in case of a need?
Okay. Ladies and gentlemen, this is the biggest day for the budget, and the best lineup of speakers is with us. It's a crisis of plenty. Welcoming Devin Choksi, Devin Bhai, MD at DR Choksi FinServe, and of course our very dear friend Manish Sonthalia, Chief Investment Officer at MK Investment Managers. And within the studio, we also have Sakshi getting mic'd up. Devin Bhai, coming to you. What are you looking forward to in the budget? It's going to be a balancing act. Do you think populism will win, or will fiscal prudence and the way the budget has been done for the last 3 or 4 occasions will find more support amongst bureaucrats and politicians? What's your thought?
Yeah, good morning, Shell. Well, I believe that I think the name of the game here would be the consistency and the growth. This government has demonstrated incredibly high amount of will to basically pursue the path of growth, and that's what I think one is expecting out of this budget as well. Economic survey has given couple of statements, I think, which are very, very clear as far as the intent is concerned. They want to bring the fiscal deficit back to 4.5% by FY26. So which means that interim budget, which projected at 5.1%, is basically being brought down in 2 years' time to 4.5%. Does mean that I think they are significantly counting on higher amount of revenue on one side, and also they would probably be expanding larger amount of infrastructure projects, I think, which they have committed for. But in the most important statement along with that is, I think they want to invite public-private partnership, which means that government is very mindful about, I think, stretching their financial resources. They do not want to unduly stretch the financial resources. At the same time, I think they want to invite the global capital, both in form of debt as well as in equity. And that is a reassuring statement as I see it currently. So in my viewpoint, I think the allocation of money as a priority would go towards infrastructure, where about I think 12.5 crore kind of a budget allocation would take place from interim budget of around 11.1 lakh crore. And at the same time, I think the PLI-based manufacturing for
Yes.
Make in India program at the same time should be, I think, be given the larger preference with newer industrial segment, I think, getting included to PLI, including the chip manufacturing, among others. So I think to a greater extent, we believe that I think the spending on infrastructure, spending on manufacturing, and spending on agriculture largely to create high amount of I think dependency on the food security business. So there the program
Right,
is
sir.
likely to be on the agriculture side. So we are clear about I think the job creation also simultaneously due to all these three focus areas.
Okay, 60 points higher on the Nifty, and infra is in top shape. Ultratech up 1.5%, Tata Steel up 1.2, NTPC 1.2, BPCL adding about a percentage point. Sakshi is with us. Good morning.
Good morning, Shell. You know, I was there, and good morning to Devin Bhai and also Manish joining right in. Warm welcome to both of you yet again. I was at the India Today studio since 7 a.m. and you know, they had this tagline that they were flashing: Naukri, Nifty and Nation. That is what they expect the budget to really focus on. And I want to understand from you, Devin Bhai, Naukri, Nation, Nifty, क्या चलेगा इस बार के बजट के बाद?
तीन चलेंगे, उसके अंदर कोई चिंता करने का जरूरत नहीं है, क्योंकि जैसे अभी हम बात कर रहे थे कि the amount of job creation which is basically expected out of all the three programs which the government has possibly emphasized on, be it agriculture, be it infrastructure, be it manufacturing. In each of the three programs, I think the underlying assumption is that the government will end up creating the larger amount of jobs, which is also being emphasized in the survey yesterday. So I think from a perspective of I think looking at the budget as a balanced one, I believe that it will lay down the path for next 5 years easily, which would possibly be continuing on the program that they have already announced. But at the same time, they are expected to increase the PLI bandwidth to a greater extent, I think including some other sectors in allocation of money therein. So that is one area which I believe going to be taking the prominent move from the government side. As far as I think the Nifty is concerned, Nifty is a byproduct of I think the government's economic policy and the outcome out of that. So Nifty, even though there may be some sort of correction here and there, would probably show higher path going forward in next 3.5, 4 years time, wherein one could expect that in 5 years time, I think Nifty could be doubled from current level than what it is at this point of time. So certainly, I think we are expecting both the Naukri as well as the Nifty. I guess I think both of them are probably taken care of, I think, in the course of time by the government's policies.
Right. Manishji, let me bring you into the conversation as well. Tell me, what could be a make or break in this budget and in this budget speech for the markets, for the economy?
I don't think there is a space to do a lot of break now. At this stage, of course, you know, for equity markets, disappointment could come from in the form of capital gain tax. I think there will be disappointment. But for economy at large, and I think macro is chugging along. We've got one of the best macros since early 2000s.
Yes, correct.
Less than 1% CAD, run rate of core inflation at less than 3%. Fiscal deficit. You're arguing that any shadow of fiscal deficit is negligent. PSU entities are not borrowing, so there is a lot of space almost everywhere to actually raise money. So in a sense, budget typically is a revenue versus expense, and I guess there is enough revenue flowing in to spend and give it.
I'll interrupt you just for 30 seconds, Manish ji. That's the finance minister showing us the Bahi Khata, the tablet in the red cover, visuals coming in from North Block outside the finance ministry right here. She's also clad in white and red with that red cover of the tablet complementing her as well. Smiles all the way. The entire team that has been behind the construction of the budget this time around. You do see key finance ministry officials right here, right behind her. All smiles and confidence displayed on their faces. You have some important people right there. CEA V. Ananta Nageshwaran. You also have the Secretary Finance, Dr. T.V. Somanathan, Secretary DEA Ajay Seth, Secretary Revenue You also have Sanjay Malhotra, Chairman CBDT, Ravi Agarwal, Chairman CBIC, Sanjay Kumar Agarwal, all of them behind Finance Minister Nirmala Sitharaman, and the wait is only going to be much shorter now for us to really see the budget speech at 11 a.m.
Right, ladies and gentlemen, and from here the Finance Minister proceeds to the Parliament, where she'll present a concise copy of the budget proposals to her cabinet members and of course to Prime Minister Narendra Modi, and then we'll see her proceeding to the main hall of the Parliament. But till then and now, we have Mr. Manish Sonthalia joining us. He is the Chief Investment Officer at MK Investment Managers and a very long-term watcher of the markets. Good morning, Manish. A very warm welcome on Market Today. A couple of sectors you think will be benefited from the budget speech about 1.5 hours from now?
So I think a fine balancing act is required between capital expenditure and revenue expenditure. I think some measures to have some money in the hands of consumers is the need of the hour, and there'll be a lot of proposals that would be watched at primarily from a taxation point of view, because that would imply leaving some money in the hands of consumers. So some increase in the exempted tax slab would be watched out for. In terms of housing, I am expecting some big announcements, because government has actually alluded to the fact that affordable housing, which is PMAI, would get a good boost. Apart from this, capital expenditure would include your flagship expenditures in, let's say, railways, defense, infrastructure, renewables, power. These would be part of the course. I mean, it's very much expected that there will be an impetus given out. But key to watch out for would be some of these sectors, basically your industrials, would be your consumption, housing, infrastructure. These would be some of the sectors to watch out for.
Right. We'll also get into the conversation with Manish Tangi also right here. Manish ji, as the markets have settled, 1 minute to go for the markets to open, all the sectors into the green. So we are going into the budget speech with a high hope right there. 0.25% uptick on the Nifty and about a 0.4% uptick on the Nifty Bank. You tell us 3 key sectors that could benefit the most from the upcoming budget, and anywhere that you could actually see, an adverse effect coming in.
So I think from a theme standpoint, I agree with Manish there that it's likely that incrementally an impulse for rural versus urban, and a proxy of that will be FMCG over discretionary. I think global cyclical slowdown outside of US has already played out significantly. I think global cyclicals such as IT would do better than local cyclicals. So my portfolios, would invariably somewhat different from say right now people who are actually thinking super India bull, because I'm watching as you said, Revex in India for last 2 years has been growing at only 4-5%, delivering very low core inflation. That typically historically has hurt margins. Now hasn't happened so far, but it is a harbinger of a possibility that eventually margins will cave in. So which is why, the places to hide in India are these, non-discretionary FMCG staples, global cyclicals and such likes, instead of sort of super local businesses like discretionary and industrials.
Okay. Sakshi, what we'll do is we'll just pay attention to the markets a bit. Remember, they're likely to be flat till the speech starts, and flat as flat can be. 58 points, a green tick on the Nifty, 24,564. Nifty Bank is up 100 points. The IT index in the green, as is the Nifty 500. Let's look at some stocks. HDFC Bank down about 4 rupees at 1638. Reliance at the moment is clicking 6 rupees higher, 3006.4. And what about Infosys in the green, about 2.6 rupees higher, 1814. It's a nice green tick. All 10 index heavyweights on the Nifty are right up there. Let's look at the ways how the most traded are tracking, and at the moment we'll try and pay attention to the PSU basket. You have RVNL clicking it up from the railway side, 1% higher, 629, 630 now. All of them are there. HAL, BHEL up about 1% each at 5,024 and 314 respectively. You have all the favorites, Sakshi. IRFC up 1.5%, Cochin Shipyard up 1%, Mazgaon up 2.6%, Railtel adding 538 at 2% higher. You have HUDCO as well, 0.5% higher. Again, ladies and gentlemen, it's going to be a PSU day. And apart from the 4 indices that we had mentioned, of the 19 we track, okay, all 19 are in the green. Let's look at what the NSE 500 is doing. 23,000 right there in front of you. Up about 0.2%. Advanced decline is fairly good. 1,400 shares in the green, 470 in the red. Coming to Manish Sonthalia. Manish, you've mentioned housing as one of your favorite sectors. Within the infrastructure space, a lot of expectations that the 11.11 lakh crore allocation that happened last year will see an augmentation. Any favorite stocks, sectors or themes that you'd like to play out on infra?
So I think, it would come to power as a major theme in the infrastructure space, which will require a lot of boost. Because if we are growing at 6.5–7%, we need energy security, and given the data center proliferation, etc., we'll be guzzling a lot of power, and probably in terms of securing that power requirement, I think a lot of impetus will be on renewables and the power space as a whole. In terms of the others, which is basically your defense and railways, it would be a continuation of what has been alluded to in the past. Allocations would be watched out for, and obviously the allocation to capital expenditure will depend a lot on what the revenue expectations are for this budget, in terms of what the real GDP plus the inflation, in terms of what the multiplier, in terms of how many times or what percentage of GDP growth will translate into revenue growth by way of taxes. That is all the maths that needs to be watched out for, and obviously one needs to keep an eye on the fiscal deficit. 5.1 is what the markets would like. Anything more than that is not warranted and would not be liked. So all this fine balancing act would be keenly watched.
Right. Let's get in Devin sir into the conversation. Devin sir, do tell us, what is on your top expectation? You may be looking at a wide sector-wide expectation, overall economy-wide. We've been discussing capex, infra outlay, everything. But what is your one top most expectation from the budget?
Well, I think undoubtedly within the infrastructure space, there is going to be, I think, emphasis coming up more on the front of the power generation, that too within the renewable power. The focus would be on green hydrogen, because India promises to be the world capital of green hydrogen with its electrolyzer technology adoption, which I believe is going to play a key role in bringing down the cost of the power. So government's focus for 2029 is going to bring down systematically and structurally bringing down the cost of the power. So that's where I think the larger amount of allocation of money towards the green hydrogen programs, which the government of India is basically wanting to carry out. And at the same time, I think the PSUs, and particularly the oil PSUs, are the ones who are likely to be allowed to set up their own companies or subsidiaries within them, for which I think this particular program will be carried out. So we are looking at, I think, the PLI allocation also on this particular front from the government. The second most important area where we see the distinct amount of possibility is inland waterways transport facilities, wherein I think the shipbuilding and inland water transportation is going to be given the extremely high amount of weightage, and that's where the allocation of money could increase along with, I think, the other areas which we have seen up till now. If in the previous cases, I think they had spent significant amount of time in creating the freight corridor, I think this time around it's going to be the turn for some of the inland transportation on the railways front. That's where I think the larger allocation of money could take place. So keep watching out for a couple of these announcements as they see, I think, happening in this budget for the infrastructure segment in particular.
Okay, let's get Mr. Dangi his thoughts on the markets. Manish, a huge amount of run-up has happened, and we'll show you sectoral performances. The worst performing sector is FMCG, and even that index on a half-year basis is up 7%. Forget the rallies that we've seen on PSUs, on realty, on oil and gas, all up between 35 and 42% over the last 6 months. Now, as a stock picker, because all of us have to make money at the end of the year, where is your focus so far? You've mentioned in your documents that your research team is looking at specialty chemicals, but this is something that you don't understand on your own. Nevertheless, let's hear it out in terms of stock picks.
No, I would talk stocks, but in general, my view, and there is a conflict here because, people who watch technicals in my team, the ones who understand the micro dynamic of markets, kind of see no reason to yet take a call that this is it. There is still very, very buoyancy that they can spot in the market in terms of volumes and the way vols are. And the way, though I have to admit, and they themselves say that the breadth has been reducing underneath. There is a turmoil in the market, and in a sense, what you invariably get from all investing teams, including mine, is the rotation. That anything that hasn't done well in last few months would potentially do well. Primarily, this happens, Chief, when there is a flood of money coming in and you're literally, as a fund manager or analyst, looking for a next opportunity, which you actually don't get in absolute terms, but invariably find that, okay, something that hasn't done well will eventually catch up. And this is how the chemical business also is being spotted by my team. Of course, last few years, pretty much like some of these private banks, IT, not done well, and likely that there could be a mean reversion in terms of performance because rest of the sectors, most of the market otherwise are sort of super overheated. So it's a mean reversion trade.
Yeah.
I personally, as I said, I like global cyclicals and I like defensives in India, and FMCG happens to be one of it, which will actually at least defend well in case there were to be an Indian cyclical slowdown over next 6 to 12 months.
Okay, so the mosaic of the market, ladies and gentlemen, is in a shade of deep green, and that's simply because the monthly FII numbers, the very strong inflows of SIPs, ultra HNIs, HNIs and retailers hunting on a minute-by-minute basis to punt on markets. Now there is a crisis. We have two Manishas on the screen, so I'll stick to surnames. Coming to you, Mr. Sonthalia, you've been a stock picker. We've been speaking to each other for the last 3 decades or so, and you've created enough and more wealth for all your unit holders and PMS customers. Where is your sight and what is on your radar?
I think one space which is quite overlooked and I think is not yet priced in, is the housing space. It has gone through some correction, and I think this year, housing as a theme would be performing, and all aspects of housing, whether it be housing finance, whether it be cement, whether it be tiles, plyboards, paints, etc. I mean, you can take your picks in each of these spaces, but I think this is one theme that needs quite a bit of watching. And the second is basically your BFSI. I think there will be some announcement when it comes to the problem of deposit mobilization, ATC deduction, etc., which was taken away, might come back because the sector is grappling with shortage of deposit, and of course it's quite an undervalued sector, so to speak. If India has to grow at 6-7% for the next 5 years, you can't imagine that if there's not smooth flow of credit through banks, and if LDRs are a constant concern, then those targets would be quite difficult. So from that point of view, I think banking and housing, these would be the two themes that I would be watching out in the budget very, very closely. Rest of the sector, there will be allocations, but capital goods, defense, railway, they are priced to perfection. for the next 5 years of earnings, I would believe.
Okay, I'm going to continue with my gentle coaxing to get both Manish's, Mr. Dangi and Mr. Sonthalia to come up with stock ideas. But meantime, we'll have Sakshi on the main screen. And ladies and gentlemen, there's going to be a plethora of data that Business Today Television has prepared for you before the budget comes online. And there she goes.
Absolutely, Shell. A whole host of numbers that we'll be watching out for in the budget speech. Of course, the first one will be on the growth figure, on the GDP factor. Already in the economic survey, a 6.5 to 7% expectation has been set. But if we look at the kind of figures that we are looking at on the GDP front, I will just show you on the budget dashboard that we prepared for all our viewers. You remember from the time of COVID-19 when the GDP had crashed, we've actually seen a stable economy emerging over the last few years. We are at a stable footing at 6.8%. Remember, we got that big, bonanza figure of 8.2% for FY24. Now the expectations are set for 6.5 to 7 odd percent. But the big question right now is that this growth in the economy, the big criticism that the government has been facing is that it is unequal. You do see a K-shaped recovery that's been happening, and that is one thing that the government really needs to address, whether this will be an inclusive growth that they will actually propel with the upcoming budget. The second important figure that we are going to be looking at is also from the inflationary aspect as well. Remember, inflation has been sticky. Food inflation is something that is worrying the government at this point in time. They really need to come out with the agri reforms, something that can improve the agri infrastructure, the warehouse facilities, the storage facilities, the way the climate change is impacting harvest season, unseasonal rainfalls. That is something the government will really have to take note of. And because you've been seeing that the inflation has been inching down, can it cool off further is something that we'll be watching out for. Again, the government is very, very comfortable as far as the tax figures are concerned. Both on the direct side, there has been a comfortable inching from last FY21 to almost FY25 estimated. Look at the 22 lakh crore rupees odd that is expected in the upcoming budget as well. We are already at 20 lakh crore rupees, both on the direct as well as the indirect side. These tax collections are pretty buoyant as of now. The tax to GDP ratio also shows a continued stability at around 11.7. The big question is, what will the government really do of this revenue collection, of this tax collection? Now, will they deploy it meaningfully back into the economy, get the ball rolling and get the economy back on the glide path as far as the growth is concerned, Shell?
That, ladies and gentlemen, was the pictorial representation of what you might just see discussed in the forthcoming budget speech. Let's head back to the market. Flat as flat can be. Nifty up just 16 points. 10 points up on the Nifty 500. The bank is doing 64 points higher, and I'd just like to mention 4 stocks that have hit record highs. Federal Bank, ladies and gentlemen, 2.8% higher, 198.3. Godrej Consumer Products, 1474, 0.5% higher. The general insurance space is lit up by ICICI GI, 1904, up 0.5%. And from the specialty chemical space, we have PI Industries, 3994, up about 0.3%. Mr. Dangi, coming to you. This wonderful article of faith that retailers have put into the government as also the stock market is this SIP number now touching 21,000 crore rupees a month. Do you see this accelerating, and do you at the same point of time see this as keeping valuations frothy and fund managers such as you on their toes to pick up outperforming stocks?
This is the inertia. This is the momentum that market has right now. Investors have figured out a place to make the decent amount of wealth, and therefore it will continue. The way to assess whether it will continue or not is whether policymakers would respond against it. So see, look, it has come to a point where RBI, SEBI, even FinMin officers, yesterday Anand made this points that, look, we need banking deposits also to grow because it's an important source of capital. Now, I do not agree with this that, capital markets and banking actually compete, because principally all the money in the capital market still sort of spill back into the banking, and therefore the deposit creation or deposit growth has got nothing to do with, high SIP numbers. But be that as it may, the reality is that, today the entire policy ecosystem is telling you that, there's something excessive happening right now and must be sort of tamed. Now, it's likely going to happen in the form of doing something to break the FNO bubble. But all you know is that, some other measures are also taken, because I think there is a bit of a discomfort here.
Right. Mr. Santalia, let me come to you now. I want to really understand, there is an argument going on that whether the government, which has now more money in its hands thanks to the collections on the taxes front from forex reserves or from the RBI, how should the government be really using this? Should one really look at a complete reduction on the fiscal deficit part? Will that make the markets more happy? Or should this money be deployed to spur consumption that has been faltering as of now? Where do you think the markets will be happiest and how the money is deployed on this front, sir?
Markets would definitely be happy if the fiscal deficit target for FY25 is kept at 5.1%. Obviously, government has to do a fine balancing act between revenue and capital expenditure. Markets won't be pleased if the numbers go beyond 6, and that was the last year's figure. But I don't think there is any requirement for that sort of fiscal deficit to be maintained. We are in good times, and I think the government should use that opportunity to bring down fiscal deficit targets in line with the FRBM Act. In that backdrop, I think some leeway in terms of relaxation of taxes for the middle class would definitely help and cheer the markets, because there will be more spending that would happen. Consumption does require some boost. The rural folk, the middle class, the urban middle class are all reeling under the yoke of inflation as well as high taxes. So some leeway out there would be very, very helpful from a sentiment point of view. And at the same time, I think to propel capital formation, the momentum, as has been seen in the economic survey, capital formation at 9% incremental last year was very good, and I think that momentum needs to be maintained. How the government is going to balance disinvestment, because there have been some statements that we are not looking at disinvestment, no need to form targets because you really don't collect anything. So I think that is another space that would be needed to watch. Non-revenue receipts, which is basically a capital receipt. How the government is going to fund non-revenue receipts. So I think this is where the entire focus would be. And in this whole backdrop, some announcements on housing would also definitely help.
Right. We'll also get in Mr. Dangi into the conversation now. A big thing on everybody's mind right now is whether there could be any tinkering of taxes on capital gains front or on FNO. Something that has been spelled out by the SEBI chairperson and yesterday in the economic survey as well. Do you expect to see some tinkering on that fact? And in case something of that sort comes, how will the markets react to it?
So I'll be surprised if nothing is there. It's just that, these two are conflicting choices, doing capital gain tax as well as FNO. So I guess if the primary function is to sort of tame the speculative activity, given the fact that near 90-95% of the people end up losing money in those trades, unskilled that they are in this craft, I guess something ought to be there. And then that does not sit really well with higher capital gain tax. So I guess if something will be there, more likely towards FNO. It may very well be handled by SEBI, and a general sort of a remark could be there from Finance Ministry as well as an instruction. But I would be very surprised over the next 3 months, significant measures of policies are not rolled out to tame the FNO activity in India.
At that point, Sakshi, at this point of time, we are the largest derivatives market in the world.
Yeah.
Even though the comparison between Indian stock markets and Wall Street is David versus Goliath, but that's the frenetic level of options activity that we are seeing in India. Staying with you, Mr. Dangi, one question that I have in mind is at the opposite ends of the spectrum. What are you not looking at in terms of creating value for your unit holders in the PMS scheme? And what are you looking at in terms of sectors where you are busy picking stocks?
Listen, as I said, at this stage, last time also we discussed, the most profitable trade in town is actually low inflation, low nominal GDP, and therefore low rates. And so it's very likely, in my view, that a long bond in India over next 2 years would perform somewhat close or better than Nifty. That's my big picture view. Uh, Basically, a 10-year bond at 7% once bought, and if the rates head to 6% or below, which I think they will, in fact, they may head to 5.5%, you will end up earning 10-12%, and you're not going to earn more than that in Nifty. Second, I think that Indian balance sheet is a better place to bet on instead of Indian P&L. So corporate margins are at multi-year high. They will very likely sort of go down from here, and therefore there will be disappointment on that. But on the P&L side, but I think the balance sheets are so strong and they take a lot longer to decay. So a credit is a better way to play corporate balance sheets than corporate than balance sheets. So therefore, you can invest in credit portfolios. Sectors we've already discussed, so I won't repeat them.
No.
Okay, that, Mr. Dangi, is enough fodder for the next interview that we'll be doing for you. Thank you so much for your time, and it's been an excellent 45 minutes understanding the best macro ever, and of course how to play it in the markets. We now welcome Mr. Mahesh Patil, Chief Investment Officer at Aditya Birla Sun Life Asset Management Company. Good morning to you, Mahesh, and a very warm welcome.
Yeah.
Your first and two major expectations on the macro side as far as the forthcoming budget speech is concerned. How do you feel?
Yeah. Good morning. Morning. I think today is the big day again, as the market expects. So I think in this budget, as what we saw in the interim budget, I think clearly, I think the path towards fiscal consolidation, I think that is clearly on the way. We don't see any deviation from that. Okay, I think that will continue. At the same time, I think we've seen the last 2-3 years, right, post the pandemic, the focus has been in terms of trying to stimulate the investment, trying to address, okay, the supply side, okay, of the market, because we had inflation also, okay, which was a big concern earlier. Now, inflation is thankfully under control. Okay, we're seeing macro stability. I think this is the time where the government could try to stimulate on the demand side. And we've seen that while the economic recovery has been good and the overall GDP growth, for last year was healthy. And this year also we expect around 6.5% kind of a GDP growth. There are a few pockets in the economy which are still yet to recover, and primarily on the consumption side, okay, which is still lagging probably the pre-COVID trend, which was there, while investments has caught up with the pre-COVID trajectory. So we could see the government trying to stimulate. One is the consumption, especially at the bottom of the pyramid, right? Okay, in terms of some kind of tax cuts, okay, which could be there. Also, the rural economy has been recovering slowly, but not to its full potential, and some support to that, okay, could be seen in this budget is what I think. So a bit of some social measures, I think some balance, I think, okay, to have stimulate the consumption at the demand side of the economy could also be seen in this budget is what one can expect.
Right. Mr. Patil, very good morning to you. I want to understand one thing. Why this budget has a different context is because this comes right after elections where the BJP has lost majority. It is an NDA-led government. There are coalition pressures that they are going to be facing, which something was absent over the last 10 years of their governance in the country, where they have largely stayed on the fiscally prudent path. Will that change with the current budget? Do you see a risk of tilting towards populism at this point in time, something that they may have to even listen to the allies and their demands, something that may not be as fiscally prudent this time around? Is that a risk?
I mean, looking at what the government, the intentions are, and also in the economic, so I don't think the government will really budge from its path, what it had chosen in terms of trying to ensure there's macro stability. And they did a good job both on the monetary as well as on the fiscal side. And I think will continue. The good thing is that this time around, the government has got some fiscal room because of the large RBI dividend which has come in, which is almost this time it is 0.6% of GDP higher than what it was earlier. So that gives you some room for the government to really utilize that proceeds, for doing some social welfare measures, to bring some, as I said, to stimulate the consumption side. But apart from that, I don't think this government is going to deviate from the earlier path what it has chosen. I think targeting inflation, which RBI has also said that will remain their priority, and I don't see that that should election outcome also. While we've seen that the government hasn't come with an absolute majority, but clearly I think they are still a dominant force, in the coalition. And while they will have to take up, with I think this time probably we would see, the budget, while we talk about the central, but the states, how they spend their budget, I think is equally important, right? So probably the devolution on the states, one can see some increase over there. But I don't see any major risk to the government's path, what we've seen in the earlier budget. I think it will probably be a continuation of that.
Okay, let's take this discussion a little forward, and in a while, a very dear guest and friend will be miking up in the studios. We'll introduce to her shortly, till the time the mics and the earpieces are in place. Mr. Patil, I have in front of me your best performing and largest fund at the AMC, which is Aditya Birla Sun Life Frontline Equity. About 24,000 crores is what is managed under the direct plan. I'm just looking at the portfolio, and I look at very strong weightages on private sector banking. The guest before you was talking about the strong Indian balance sheet that is in place, and of course credit might be the best place to make decent long-term capital appreciation. Would you want to comment on the private banking space at this point of time from the point of view of valuations?
Yeah, so the banking sector, if you look at, has had last year was a good year for the banking system. We had pretty strong credit growth. Credit costs, as which is also another important factor which impacts profitability, was also at an all-time low. Thanks to the corporate balance sheets are in a much healthy shape currently at this point in time. We've seen the big deleveraging has happened in the corporate balance sheet side, and also the retail credit has behaved still very well, though there are some pockets, where some caution has been raised by the RBI, especially on the unsecured lending, which is being monitored very, very closely. But by and large, we think that the banking sector, which is a proxy to the economy is likely to grow at a healthy pace. You will see steady, good credit growth. However, the large margin improvement, what we saw last year, because in an environment when interest rates went up, I think that is going to slightly moderate. But overall, we see that the banking sector should do reasonably well. The private banks, especially within the whole banking space, have relatively underperformed, right? In the last one, we've seen the PSU banks do much better because they've seen a re-rating on the back of good numbers. We've seen good profit growth on the back of low credit costs. But I think going forward, if I take a slightly medium to long-term view, then the private banks have a better chance of compounding their earnings from here on. Overall valuations also, if you look at the large private banks, they are compared to the broader market valuations, which are slightly higher than the long-term average. I think for the private banks, it will be somewhere closer to the long-term average. So valuations are not really expensive, and overall, we don't see any major stress. Okay, either on the corporate side, even on the retail side. I think most of the private banks have been prudent in terms of managing the lending. They haven't taken excessive risk. So I would say that banking can be a sector, especially private banks, which can provide stability and can potentially outperform the market over the medium term.
Right, Mr. Patil, we'll also welcome into the conversation Mrs. Punita Kumar Sinha, Managing Partner at Pacific Paradigm Advisors, now joining in here in the studio is with us. Warm welcome to you, ma'am, and thank you so much for taking the time out and being with us here in our Noida studios as well. What a pleasure. We've been always discussing with you across geographies and on the Zoom links. It's so good to see you in person and on such an important day. You tell me, what is your top wish list from the Finance Minister today as an investor and as a stock market advisor?
Well, first of all, I think I'm quite pleased with the state of the Indian economy in general. It's very buoyant, it's in great shape in general compared to what I'm seeing in other economies. So I'm not really perturbed by anything really serious. The only thing I would say is that the rural sector continues to not do as well. So anything to make the growth more balanced, so that the income inequality that has developed gets a little bit less unequal. So to focus on the segments of the economy that have been on the weaker side would be what I would think would give a longer term sustainable, better future for India.
Which are the sectors that you feel are going to be benefiting the most after today's budget speech is presented?
Well, it's very difficult to know what they're going to announce, but I expect that there will be some initiatives that will help the overall agri sector, the youth, the employment, skilling. Some emphasis will be put on those. So I think companies, potentially FMCG, anything in the agri space, maybe some of the banking sector may also benefit as a ripple effect. So I think that sector is likely to be more positively impacted, assuming that they do announce some SOPs for those sectors.
So two market masters with us, ladies and gentlemen, Punita Kumar Sinha and Mahesh Patil, discussing what the forthcoming budget speech might hold. And as you may have noticed that both ladies have hit a purple patch.
And you're in the pink of health in between.
It's all the same.
You know, health is a touchy topic, but I'll still take it. So, Punita, a stock picker on my left, and Mahesh, another stock picker across the screen in the capital city with us. It's been a fabulous rally so far. Absolutely no points of complaining. As I have been mentioning repeatedly, the worst performing index is the FMCG index, and that too is up 7% over the last 6 months. Punita, to you first. You've always been a person who's deployed money in dependable long-term balance sheets where you see a margin of safety and you see a huge moat in terms of earnings. Even now, you see the large cap space which has relatively underperformed the fantastic rally in mid caps and small caps. How are you hunting for outperformers in markets today?
Well, first of all, I think it's important to be focused on value.
Yes.
Markets had become a bit frothy, and especially in the mid and small cap segment, SME segment, the crazy flows and the deals that were happening. I think it was showing some signs of risk. I think that now one will probably see some rotation into value. Depending on the budget, there may be some more of a last gasp rally in mid and small cap if there is something very growth focused. But in general, I would say that we've already started seeing, as you said, FMCG, rotation into IT, rotation into some of the laggards. I think those are the sectors that would be safer at the moment, given the valuation disparities.
Okay. And Mahesh, I was just going through your top performing fund as far as the portfolio is concerned. Of the top 20 stocks, I believe 17, at least 17 are Nifty companies. There's just one small cap, Crompton Greaves, actually mid cap. Is there a concerted effort on your part and your team's part to look for value and relative undervaluation in this market, which is rocketing on a daily basis?
Yeah, so I think the fund which you're referring to is primarily a large cap focused fund. So you would see most of large cap. We have some mid caps, but there are two things what we are looking at this point in time, right, in terms of the strategy. Clearly, I think there has been some pockets of exuberance in the market. We have seen sharp rally in a few sectors where the valuations have probably gone ahead of our expectations and discounting too much distant in the future. We are trying to be cautious over there. Again, within the mid cap, large cap space, if you are a small cap, clearly the large cap stocks, the mega caps, is where we find relative valuation comfort, okay, in terms of risk reward. So our bias would be slightly more tilted towards large caps in the portfolio. That doesn't mean that we don't like mid cap and small cap, but becomes very, very stock specific over there. At the same time, I think this is a time to also play some contra, right? There are a few sectors, okay, which are probably underperformed because of whatever short-term concerns. And to the sectors, okay, especially if there are good companies in those sectors, is what we are looking at and trying to see if we can see a turnaround over there and trying to build exposure over there. So I think we've seen a large momentum trade play out in the market in the last 1.5 years, right? I think somewhere down the line, I think we're seeing it slightly try to be cautious over there, focus back on fundamentals and valuations, and find out relatively, okay, where one is seeing. I don't think there is absolute value in the market at this point in time, but relative value is what we are looking at and trying to align the portfolio over there. At the same time, also trying to ensure that companies we're investing into or sectors where the earnings disappointment chances are lesser, because I think at these level of market and stocks, wherever we see earnings disappointment coming, I think you will see the markets punishing them also equally harder. So I think that is what one needs to be careful at this juncture.
Okay. Mr. Patil, one more question, and that would be regarding those two runaway sectors, defense and railways. 2 lakh crore rupee market cap has become 18 lakh crore rupee market cap for these two sectors. And again, you know, in the upcoming budget, there will be certain announcements that will be made for these two particular sectors in the way of higher allocation and some more announcements. Do you think the prices right now that we have will get incrementally higher after those announcements, or are you thinking that this space could be much more frothy after the budget, as a lot more is already priced in?
Yeah, I think so. I think in the budget, we see a focus on infra and a lot of some of these sectors like railways and defense being talked about, but we don't see any major change in the trajectory of what the government has been doing in terms of the allocation over there. So I don't see any reason to be excited in the budget, okay, which can further increase allocations over there. Having said that, I think some of these sectors which you talked about, right, we have seen there's been a lot of expectations, okay, which have been there. Obviously, the sector has seen a good growth. Okay, there are, I mean, the outlook there is definitely better, but clearly the valuations of some of the stocks have run ahead. So I think we're slightly cautious, okay, as I said, in sectors where there's a huge run up and the valuations are, say, about 2 standard deviations above their long-term average. I think one would not want to really chase them. But so I think I would say that trying to really play, because we see in the budget, I think people tend to overreact, right, on certain narrative which is there without actually looking at the number, whether there is any meaningful change, okay, which can significantly alter the trajectory. I think one has to really look into rather than trying to just go on the narrative and try to ride some of these sectors.
Okay. Getting Punita into this conversation, every day when a long-term investor wakes up, Punita, he or she feels very happy looking at prices. You know, you sleep over and you realize that the portfolio is up 0.5%. It's a great feeling, but it's also a feeling where you have to realize that profit and deploy that money elsewhere for it to make more money. Now, tell us which part of your portfolio over the last 1 month or so you've booked profit and where have you poured in that money?
As I said, I think IT, FMCG,
Yes.
right after the elections, I think that's a space that we've definitely seen more allocation to. And that, I mean, through the year, earlier this year, I mean, there has been some shift going back into quality and into more value oriented sectors, because this is a year of a lot of elections globally.
Yes.
Right? We've obviously seen elections in India, and that has resulted in not as stable a government formation as one would had hoped before election. We are seeing a lot of rhetoric and uncertainty in the US elections with what's happening with the Democratic Party. So, and whether we like it or not, India's growth story is great, but flows and markets are correlated. So if there's uncertainty in the US markets, which there is right now, there'll be more volatility, and that will definitely flow to India as well. It cannot be completely uncorrelated with what's happening in global markets. So to that extent, I think there is a little bit more uncertainty in the global situation. Valuations are much higher than they have been in the past. So given this kind of a scenario, it's better to be a little bit more focused on long-term, good quality, healthy balance sheets, etc., and not be a day trader doing just FNO.
Sure, absolutely. Punita, one more point that I wanted to discuss, since you talked about global markets, global scenario, very well linked world. Everybody is now looking at what will happen in the US elections. Is Mr. Trump coming back, or is it going to be Kamala Harris? What do you think, and what will be better for India?
Well, I think it's a little too early to say what will happen with Kamala Harris. She's just been announced. I think there's still people absorbing that news. I mean, it appears that Trump is leading at the moment, but there is still another 4 months into the election, and so anything can happen. And whether they'll be good for India or not, I think in general, both every party in the US and India is strategically very important, and so they'll both be good to India in general. Whether one will be marginally better or not depends also on their priorities. Remember that Trump is also very focused on stimulating domestic manufacturing in the US, and that could hurt some of our exporters as it did. So the trade dynamics could change with Trump, and that necessarily may not be better. It depends on how it pans out.
All right. Well, many thanks, Punita, for being with us here in the India Today studios on Business Today Television. And thank you so much, Mr. Patil, for your time as well, helping us understand, which way the budget could be shaping going forward from here. The entire day, viewers, we will be continuing to get you the top voices that you should be listening to assess how important is this budget going to be for you, for your investments. Stay tuned. The action continues in just a bit, and we'll take a very short break right here.
Sense how much of coalition dharma is likely to impact the first budget of Modi 3.0?
Thanks, Siddharth, for having me here. Let me say at the outset that the coalition politics that you talked about will definitely have its